then you use the same lot size, and your trade loss actually gets more extreme than you think. And then number 3 down here gets even more extreme, so that by the time you make your trade that you think is going to get you back up, it gets you maybe halfway back up to your starting balance. All right? Starting balance, zero balance. I hope you've all been there enough to see this, because this is the most important part of trading. The only way you can achieve a linear pullback in a leveraged market is to have, say, for instance, this is a 1-lot trade. This would be a 0.7 lot trade. This next one might be a 0.5 lot trade, right? So if you're doing that, then of course you can have a linear pullback in your balance. If you're going 1 lot on this one and 1 lot on this one and 1 lot on that one, it will roll over. That's exponential math. That's a leveraged market. A market of leverage is not a linear market. Okay, so very important that you understand risk, right? So I definitely think that's, in fact, probably the most important thing you'll ever learn if you're a new student in trading, is the idea of how to dial in lot size based on your stop loss to achieve a linear pullback in your losses compared to your wins. I mean, I almost tempted to just sit here and talk about this for our session this morning. It's very difficult to go into the charts, but I know a lot of you here aren't here for that. All right. We try to cover that as much as possible. I love the concept of risk, so I'm all over it. All right. We're looking at a US dollar chart. And for a lot of people in Forex, it's a very foreign chart. And it should be, because most brokers don't carry USDX. And this is the derivation that's not based on the Dow, which is also the Bloomberg Dow dollar. It's USDX that includes the Singapore dollar, which I know sounds rather esoteric, but it is a flow of certain funds. USDS, forget the actual name of it. I've never traded that one, but it's the Asian dollar flow comes through Singapore heavily, and it'll actually skew the US dollar. So if you're looking at a US dollar chart and you don't have Singapore dollar, it tends to look a bit different. And again, the Dow Jones version of the US dollar is a slight different variation. This one is similar to the ICE exchange. It comes out of a broker called Windsor Brokers. And you can get a demo for Windsor and watch the US dollar. Now, when you're talking about the US dollar, the reason we're looking at the US dollar, for most people, they have no real need to look at this information. But when we're trading based on what the market makers are doing, we want to get a sense of the currencies that have the largest amount of volume in them. Because if we see a manipulation pattern in one of the larger volume pairs, we can pretty much scratch off some of the lower volume pairs if there's a pattern against them. Okay, so what we have with the US dollar is $4.5 trillion a day. This is based on the all transactions. It's based on the Bank of International Settlements triennial review, which comes out every 3 years. So it came out in 2016, in April 2016. Another one come out April 2019. But based on those figures, the US dollar is the big fish in the pond. 4.57 trillion a day in the spot Forex. This is not futures market. The futures market are very small compared to this, right? Euro comes in behind it at 1.173 trillion a day. Why does that matter? Again, if you're seeing manipulation patterns in the larger pairs, it's almost like a larger cookie jar. We could say that if there are a lot of people that are about to get stopped out of trades, you can assume that the market maker is very interested in the higher volume pairs because there's simply more money to be made. It's pretty logical, right? So very clear. So that's why we look at the US dollar. Okay, so the US dollar right now, we're not seeing a super clear market maker cycle in the US dollar. A market maker cycle, what are we talking about? We're talking about this 1, 2, 3 down, 1, 2, 3 up, which does take a bit of time to refine in your mind. Sorry to be a poet, but that is basically the truth. So when we see this initially, we look for it everywhere. It's not everywhere. It's usually in pairs that are being currently manipulated. The US dollar sometimes has it very clean. You can see back here a couple of weeks ago. Beautiful market maker cycle, and then they stop hunted against lower level shorts that were caught in that move and took that up for a couple of days. Right now, we're sitting in an area that's between possible traps. So this is not what we would consider a high probability area to have a strong bias, either long or short, on the H1 chart. Okay, so I love the daily chart. You should love the daily chart as well. This is average true range that I've got on here. So our ranges per day are dropping a little bit in the US dollar. We had a nice move off of some previous trap areas. This lovely colored instrument here is basically eluding the trap areas back to the left. There's a whole science in finding stuff that the market makers are using as opposed to standard support and resistance. Standard support and resistance is not, I want to say a myth, but they're made and broken by the dealer. When the dealer sees people trading support and resistance, he will actually move to those areas and go a little bit past them to trigger breakout orders. That's pretty much what they do with these areas. And that's a great example up here on this, what we call the zone flip. You can see they pierced right through that area and then pulled back. So there's a lot to be said for the higher time frames. Right now, you can see the higher time frame sitting between two of these trap areas for lack of a better term. That's what we call them. We don't call them support and resistance. Call them trap areas sitting between those two areas. So again, we're not in a super clear location in our market maker cycle to allow us to determine that, yeah, we have a high probability of it going either direction. That's actually a great thing to know. It's almost, well, you can make up many metaphors, but there are times when you have a good idea that it's going to go long or short, and there are times that it's sitting in the range like this and you don't have a good idea. So what we try to do in terms of trading the beat the market maker method is we try to avoid having a strong bias in any instrument that's showing a wedge. All right, so we're seeing a wedge here. It's not the most high probability time to make a determination of direction. Okay, so I know that's what you're here for, is to actually get an idea of direction, but hopefully you're here to learn a little bit too. That's such a big concept because, again, when we try to put levels on every pair across the board, besides exhausting our brain, we're actually not being accurate because not all pairs are manipulated at the same time. All right, so this is basic stuff that we cover in the 4-day course that you have access to if you join, but obviously we're not going to have the time to go through all that. What I'm going to essentially do is just leave you with the US dollar with what I consider range market behavior. This is something called the daily trade organizer, which we use in these pre-market sessions to basically get an idea of our levels, our trap areas, certain conditions. Then down here, I've got CAR's ID 50 rules. All right. And then we've got our average daily range rules. And then down here, some suggested trades. Now, these aren't saying for sure these trades are going to happen, but these would be what you look for in the New York market. Okay. So the New York market, again, I want to be very clear about the New York market. What Steve's mentor showed him was this thing called the London pattern. And he basically said, if you want to be a professional trader, you want to stay up all night where you live in Florida, or move to Hawaii and trade late 9 p.m. to midnight to catch this London session, or don't even bother. So Steve's mentor did not like the New York session at all. Didn't think it was as productive. Okay, so just to put that out there, that's why a lot of times when I do these pre-market sessions, I lean a little bit more into just recovering principle and covering some of the educational material, because I want people extremely prepared if they're going to trade New York session. I really want you to take the edges of a lot of these moves. What does that mean? The tip edge. So if we have a wedge here, our best trade is going to be if something happens off the very low edge of this or happens off the top edge of this. So with New York trading specifically, rather you not be getting involved in a trade in the middle of a trend, would rather you wait for an extreme reversal, right? So US dollar, not anything super clear. We're going to flip it over to the euro, which I'll switch over here in a second. Give me a second. Bring the daily trade organizer up. So the euro is going to be similar to the US dollar, in part because that US dollar chart is created in large part by the euro. There's actually a formula that's run to create the dollar feed out of all of the USD pairs, including the euro. The euro is usually a larger piece of that formula that creates the US dollar. So oftentimes you see an inverted look on the euro. However, the euro is slightly different. The euro actually, interestingly, has a little bit more of a clear bias. Now, one thing I failed to do in the USDX. Okay, so we've checked the H1 chart. We've determined, yes, we're in a area of the market we can't determine if it's long or short. So I put a gray box here, ranging. Okay, then the next thing I want to do is I want to go down to the 15-minute and see if I can find one of these London patterns. Right? I want to see something that looks like this. All right. And of course, lo and behold, we do see something that looks like that. And then what you want to do is count 3 away from it, which if you can see here, we've got 2 so far, right? So this was Paul's trade in gold last night for those that are on the Skype group. He was obviously really nicely in line with the US dollar when he traded that. Right? This would be the 3 count that I'd be looking for away from that London pattern. All right, so now that I'm on the 15-minute, I have a little more of a directional bias. I think I'm long for the session. I've got the 1350 just crossed here, so my bias is long for the session. You could obviously expect a pullback in the US dollar. All right, so we went for the H1 down to the M15. That's going to make a lot more sense tonight when we go over things in the main forum, actually in the main daily market review session that we have at 7 p.m. tonight that I'll be doing with you all. All right, we're going to talk about the idea of using a couple time frames as opposed to one time frame. People get really mixed up when they don't have the higher time frames already worked out. All right, so London pattern on the top edge of euro. We can see that on the 15-minute chart. We come to the H1 chart. Similar bit of wedging, although it's not quite as profound. What I do see in the euro that's pretty clear is this 1, 2, 3 up where this turns. But I didn't note it on the charts yet, but let's do it together. We're going to count threes tonight also. That's going to be the theme of my session with you all at 7 p.m. Eastern. I'm going to count these threes, all right? And we're going to talk about those in terms of what they psychologically mean and why they do what they do. And it's massive once you determine that you're going to scientifically approach them as opposed to winging it, which, again, that will take more than one session with you all to get to. But what I'd be looking for is a pullback into this area. Love to see a second leg up here. Not sure if they're going to do it. Probably won't. There's a small likelihood of it, but I'd love to see that type of move in euro if they give it to us. Now, looking at the news flow today for the 11th of September, 2018, we've already had pound red news. There's no other red news on schedule for today. If we go into Forex Factory, you can see no red news. It's all yellow. So it's all low impact news. That doesn't mean spikes won't happen. That doesn't mean things can't happen. The pound has been putting in some interesting spikes lately, pretty much out of nowhere. We could expect that. All right, so I've got the small 1, 2, 3 up. I'm not going to call it a level 3, but I do want to acknowledge that we had a lot of 3 activity into this move. So an M up into this area would be very nice. Also, if we get a little further down, an ID50 short might play out. All right, so we'll add those 2 to euro. And as you can tell, I prepped these charts about an hour and a half ago. So things sometimes change as I go live with you all. All right, ID50, don't have time to go into what the trade is, the details of it. It's one of Carr's trade setups. He's the one that teaches it. So I don't try to overlap on his material. I just try to let you know if the conditions are right for it. So we have an ID50 possible short, an M short. Obviously, if they get all the way back into this area, that would be nice. Coming to the daily chart, can't really say a lot in terms of the daily other than we're doing a lot like what the US dollar was doing where we were bouncing off that lower trap area. So nothing else to talk about in that pair. Let's move on to the pound. All right, and a little bit of trivia for you. I hope you all know the reason why the pound is called the cable. Let's see if any of the new people know the answer to that little trivial question. It's quite interesting, actually. Why is the pound called the cable? New people, brand new people. People that have been with us for a while, you know the answer to that. You should know the answer to that. Going once, going twice. I'll leave it out there. All right, so let's go look at the pound as you consider what cable means. God, what the heck? Seems kind of out there to call the pound the cable. Emmanuel, you've been with us before, though. Is that correct? I'm seeing someone answer it correctly. I think he was with us previously, but let's just, yeah. I think he's. I know the name sounds familiar. Underwater cable across the Atlantic. That's exactly right. Interesting, right? Okay, so we're looking at the pound. We see here H1 TDI extremes. That gives us a sense that we're overbought. Right? We do have a cycle to the high side. You can even see this 1, this 2, and this 3. You could easily call this 3 and this 4. Certainly we can see more than 1 there. But it's pretty nice because it's trapping through this zone flip back to the left. That's a very nice key. Right? So I marked that in this D1 traps and zone flips area. Red because it's short. Got TDI extremes. That's short. So this is all conspiring to give us a level 3 short bias. So that would have been the bias coming into the session last night for pound. And certainly you were blessed with, well, does it look like the drawing somewhat slightly? Yeah. I don't need to pour that down your throat, but that's quite a good beverage to take from time to time, let me tell you. This was obviously the news, the red news event, spiked that through. But what a lovely picture that is of this London pattern off of a zone flip back to the left. You actually have to love that. So what we have here is we have a London pattern that we want to trade away from. Want to trade away from that. If you look at the drawing, this is the implication. It doesn't mean it's going to happen. It means there's a probability it's going to happen. All right, so we see maybe this is a 1, probably a 2 forming down below, and we can project a 3 even further. Notice that the news took it almost down into average daily ranges, real close. So this would have been a bright red line if that had triggered the ADR, average daily ranges. So we almost got to the entire range. So they basically did their damage running the longs here. So long participants got involved here, especially on the second pin. This looks a whole lot like a chart I'm going to show you tonight. It's actually pretty disturbing how similar that looks. Wow. All right. So hopefully you can see the M here. First leg, tap to the 13 EMA, second leg, and then the news, and it dropped right down. Very much like our drawing, but it dropped down and took out the entire range of the day. So average daily range exceeded. Little caution with this one. I definitely execute caution with this one, but some type of pullback into this area would be nice to give us an M formation at level 3. That would be our M. And then we also have a possible ID50 short. Again, it's an esoteric. We might as well be scratching out Chinese for those that haven't studied with us. I won't be able to explain an ID50 in, well, even 20 minutes at this point. That's cars trade. All right. So we're looking obviously, but the main thing to take in, I mean, really, you can make a living at this business if all you ever did was trade type 1 London patterns. There is absolutely no doubt about that. All right. So we're looking at a short bias today with a slight pullback. So we're expecting possible pullback and then the ID50 short. Okay. So I want to move on a little bit quicker now since we've gotten to know each other a little bit, especially those who have never worked with us. All right. So M short, ID50 short, GU. Let's look at Australian dollar. Australian dollar is level 2 short. The 51,200, the 5,200 EMA is pointing to the downside. Obviously means a lot more to you if you study our material. It's also got a London pattern as an anchor for the day. And interestingly enough, an H150 bounce, for those that are interested, that trade played out. I'm sure some of the cars guys got that trade. All right, looking at our big picture, starting with the big picture on Australian dollar, we had this peak back to the left. You could see price bounced off that peak and then broke below it. We have to really squint out to see that part on the chart. So that was a peak back here, peak formation low. They came to that area, bounced, and now they're breaking through it to the downside. So it's a very bearish looking chart. And if we go into the commodities, this is a weekly chart of silver. This is a weekly chart of gold. Both of them, you can obviously see them dripping away pretty strongly. And what's most interesting about gold and silver is oftentimes before they make these pullbacks to the downside, you find, interestingly enough, on YouTube and various media, propaganda that it's time to buy gold, it's time to buy silver. Well, why would they do that? Why would certain key figures who you haven't seen in years come on to some YouTube broadcast wearing a nice suit, nice tie, gold watch, rings, pseudo bling, and tell you to buy gold and buy silver when all it does is pull back? Just let you think on that one, right? It's pretty interesting. But the reason that we're looking at these in relation to the Australian dollar is that one of the key exports out of Australia is gold and silver, is metal, all the metals. The industrial metals are the largest export in terms of the metal class out of Australia. That'd be tin and scrap metal and all the industrial metals. Then behind them, obviously, are the precious metals, which are used in technology. Silver's big time in technology. And when those drop, it has a tendency to pull the Australian dollar down as well. So let's even it out and go to the weekly chart in the Australian dollar. And you can see it doesn't look a whole lot different than silver. Some people actually also put in copper. I don't as much see the correlation in copper, but I know some people do watch copper when they're looking at Australian dollar. So usually a country's currency will pull back in value in relation to the underlying commodity that's used as their primary export. Completely different topic than market making, but certainly something to keep aware of. So what do we see here? Starting to get into level 3. We've had a series of resets to the downside. We were all over this last week. And come to the 15-minute chart, and lo and behold, we see a variation of the drawing that I just showed you. Right? just a little bit different, not a big move above the Asia range, a smaller move above the Asia range, but an M off the Mayo nonetheless. So that is another London pattern. So take your pick last night, guys. You made money all over the place if you were trading type 1 London patterns. They've been going on for decades, these things. Okay, so that's an absolute fact. Steve was looking at these I'm going to take a wild guess, 12 years ago, 13 years ago, when he was studying with his mentor. They haven't stopped doing these patterns. So what we have here is we have a 1350 cross. We're looking for an ID50 short. That's pretty much it. Okay, so ID50 short in Australia dollar if you get that. All right, and we'll move it on to EA and GA. Go a little bit quicker to stay with our time. We're going to go till about the hour. We're going to go till about 8 a.m. Eastern, typically. And then I post all this material in our members forum. Obviously, the daily trading organizer gets posted. My charts get posted. I post my templates basically after every one of these pre-market sessions, which includes all of these trap areas and the drawings and the projections. Also pictures of the H1 charts as well. All right, so we're looking at what you can see here is an H1 harmonic. That's obviously a harmonic, also an H4 harmonic bearish butterfly. So both of those triggered basically at the end of yesterday's session. And so we had a nice move into that box. Let's look at our 15-minute. It's a London pattern. It just hasn't moved all that much. And you can see it started the second leg a bit later than the other ones. So what we like is we like these London patterns to happen during our gap times. When they happen later, they're all right, but they don't have as much volume behind them. And it starts turning into London lunchtime or European lunchtime, which sometimes slows the market down. All right, so right now we're looking at a London pattern, but it hasn't really pushed out yet. It hasn't pushed past our EMAs yet. It hasn't pushed past a few key technical areas we look for in our group. So we can't really say that it's super solid. It's actually should be red and not green. Sorry about that. Let me change that back around here. Okay, it's not a super locked London pattern. At this point, I'm not looking for an ID50 short. I'd basically be looking for an ID50 long, if anything. All right, let's go to the higher time frame. You've got a strong trend up. Look at this thing. EA just been rising. Now, this is the characteristic of EA. It definitely has this it'll just keep going type movement to it. That's the way this pair is. And if we look back to the left, we really don't have any volume trap areas to be looking for until we get up into this next one. All right, so at this point, some breakout traders have hit this thing. So I bias the short. I'd absolutely be short at this point while the world is long. So I really don't want to get you into a bounce off of the water. I want to keep this as a London pattern short. And unfortunately, at this point, the only thing that I would accept would be a nice multi-session M here. That would be my trade of choice for EA if they give it to us today. All right, pull back into that area short. Now, it's not as solid because there's nothing back to the left for it to anchor onto. All right, but the more that you pan out on this, the more it is just dying to correct short. Okay, dying to correct short. Looking for a London pattern possible pullback in the New York session long to give us an M short in EA. All right, moving on to GA. This is pound Australian. So you can see how I've got this set up. I'm going in major, 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 and then the crosses that are created by that major, and then another major and the crosses that are created by that major, and then another major and the crosses created by that. So we're systematically walking through this chart. We're walking through this daily trading organizer with fractional disparity in mind, or fractional relationships. GA looks a whole lot like EA. It's just screaming up, screaming up. What it did do is it gave us this pullback to this D1 zone flip back to the left quite nicely, actually. All right, so this is similar to what the pound did. Remember, the pound did the big move at news. This was obviously the 4:30 a.m. red news. Bounced just in front of the quarter point. Very typical. They do that. You've got moves from 50s to 00s constantly. This is actually a 100 pip move down here. So it was from a 50-50 to a 50 line. And at this time, it's looking too choppy for me to be excited about any trade other than an M short. And that M might happen off of current price. It might actually happen higher. If we look at the higher time frame in GA, we really similarly don't have anything until we get up into this area. So it's not going to be a super clear M today. If it happens higher, it'll be a small one. So use tight risk if you decide to take this short. But again, our bias is going to be short. You can see we've exceeded our 3 times ADR condition. That's this blue line right here. 3 times 80 air conditioned, exceeded, looking for shorts in GA. And that'll take us to the UJ. All right, W off the male, possible in the UJ. UJ is either ranging or level 2 long, one of the two. 5,200 is pointed up, but there's really nothing extreme on the higher time frame for us to grab onto in this pair, as you'll see. You can see it's just chopping sideways. This is a daily chart. Take it down to a 4-hour. Yes, we had the harmonic on the bottom side, and that gave a nice reversal. H1 chart, what I'm looking at is this prospect of a third move up. So I'm not exactly excited about any directional bias in UJ on this particular day. If we were to get up into this area, maybe tomorrow, up into that area, then it would be a lot more exciting because we'd be at the top of this range. So I'm always looking to count 3. I'm looking to get in front of that 3. What I do find, however, is I do find a variation, right? It's a variation of our London pattern. That's what we teach or try to teach as much as possible. We want you to start to see the variations because it's basically the same rig that they do. Sometimes they only do one leg because they have what they want on the other side of that 50 figure and they pull it back and run the stops. They don't need to create the second leg. So sometimes they only create one leg. But this is starting to look like a London pattern short. It's got to get a little further down before we can truly call it one. Right? We've got a couple technical things we look for in our group just to lock that in, but we're going to put a London pattern on here. W off the male looks like a possibility, and that's if we get down to the male. Now, this is a very specific trade. If we get it, we're going to hit the male, pull back significantly, and then hit it very, very quickly again. And then you would have your shift higher. Now, if you're trading New York, you're not looking to take out this area up here. You're looking to stop somewhere inside the range. You don't want to be greedy and think it's going to run to the moon. That's what happens when people associate the London session with the New York session. They're two completely different animals. And I suggest people train doubly hard to trade the New York session. That's my suggestion to you. So W off the male, I think would be the best trade. I think that would be the best trade. Like to see it come down a little further to give us that, but that will be the water on the 1 hour. That'll be the 15-minute white line, the 50 on the 15-minute. That would be a possible trade. It's got to do this pretty much exactly. So that would be the only setup I'd be looking for in the UJ. And then we'll look at the crosses in UJ at this time. And we'll look at questions, comments. So when you lose a trade with 1% of your account balance, what percent would you reduce to? I wouldn't reduce. I'd stay at 1%. The next trade would be a 1% trade. But if you're in a leverage market, your lot size would start to diminish. And that's what messes people up, right? So that's actually a good question the student asked. If you say, for instance, I'm minus 1%, okay? I take a hit, I'm minus 1%. The typical thinking is that I'll just go ahead and put one lot on again. But really, if you did that, then your trade would probably be more like 2%, right? You don't want that. You'd rather do a linear move. So if I'm going to drop a trade on this first one, trading one lot, drop that trade. The second trade, I'm going to use a smaller lot size. Instead of using one lot, I'm going to use 0.7 so I can get this 1%, right? So really what happens is your lot sizes change, right? Lot sizes change. Lot sizes change. Let's draw that in. Lot sizes change. Now that's something that most people just don't think about. Whoever taught me how to put an order into the MT4 and it mattered what lot size it was. No one says that stuff. And it's a damn shame, excuse my French. All right. So lot sizes change. That's how you have a nice linear pullback. So in this case, if I do 0.17, then that would be another 1%, minus 1% if I took the stop out on that. Okay. Instead of a larger figure. It might not be 2, it might be 1.7, or it's probably not 2. It's probably an odd number, but you get the idea. You don't want to take makeup entry. We'll just call this, recovery trade. You don't want to take recovery trades that are the same size as the one you got stopped out on. You want to dial them back. That's the last thing people want to do when they're in revenge trade mindset. Trust me. So it hurts like hell sometimes when you have to make your lot sizes smaller, but there's ways to automate that. Obviously there are a lot of tools we use to make it easy to do the math. So you don't have to sit there with a calculator and do it. All right, moving on to EJ. EJ, great example of 1, 2, 3. We're going to talk about this again tonight, 7 p.m. Eastern. We're going to dig into it pretty deeply, the 1, 2, 3. All right. See a lot of people on the inner tubes. I see people, kind of snagging Steve's stuff, talking about it, but they, just not never quite right, and it's a shame too, because people get excited and well, one thing leads to another. But we've worked with several, well, probably a lot of people who have, for instance, bought the course for $200 from some shady forum in Singapore or whatnot, and they come to our group and they get, as I was told, it feels like you're in the engine room, if you want to look at it that way. Nice 1, 2, 3 up in EJ. I hope some of you took this last night. I know it's interpretive, but when you get to the lower time frames, obviously there are a lot of things that make this a great trade, not to mention this trap line here at 129.83 that was placed here last week when we got together Wednesday AM last week. That line was there. I can absolutely guarantee you that. So, well, that helps pretty heavily. So you can see it's a London pattern, but it's only a single leg. On the smaller time frames, you have more than one leg. Obviously, you have a little more going on in the smaller time frame. So it's actually a really nice trade. Again, 1, 2, 3 up into this previous away from peak, and it falls off. So this line actually probably, it was back here on Monday and Tuesday. We put that in there. So interesting, they came right to it. It's not the first time, won't be the last time. But that's a nice London pattern move off of the highs, right? Again, it's not always going to be exactly perfect, but when you can take these on the lower time frames, a lot of times you get some real juicy activity, right? So 1350 cross, that gives us the hint that we might be getting into an EJ 1350 cross. We might be getting into the ID50 trade, right? London pattern on the top edge could really be considered level 2 either direction. And again, I don't want to get people really too caught up in the level idea unless we're at one of these clear extremes. We're down here at another clear extreme. When you're sitting in the middle like this, sometimes it's gets to be nebulous and you spend too much time looking for levels. But what I can tell you, and you can see for yourself, is that we do in fact have this going on. It's just a smaller version of it, right? See that? I mean, it gets to be extremely simple after a while, but there's a lot more to it to have you pull the trigger reliably and to build your equity curve in a way that resembles, where is my browser? There is my browser. I want to give you guys, especially the new folks, because trading to most people is a series of home runs, and it's the absolute last thing you want to do, right? Series of home runs. Okay, so there's a lot of people that can do the home runs, once in a while, and then feel like they're all right with it, but that's really not what we want to do. We want to be more like a machine that lays brick. And let's see if, yeah, here we go. So this is what it's like if you're hitting home runs. Okay, you want to be a home run trader? There you are. All right, put it in the socket. Make sure you get both in there. All right, make sure you get it nice and deep. Now, if you're someone that wants to take base hits and build an account, this is what you want to do, right? Lay brick like a freaking machine. Over and over and over again, same trade, same parameters, same everything. Narrow your specs. Homework it, study it, look back 10 years on that trade, get it under your skin, and don't get creative about it. Honestly, that's the way to do it. All right. So that takes some teaching, but I often say if a monkey can learn to ride a bike, he'll learn to trade. Whoopsie. Oh, well, you did all right. You get the point, right? If a chimp can learn to ride a bike, you can learn to trade, especially if you've got the advantage of the market maker moves. Okay, so EJ, we're looking for ID50 short. We could also possibly have a W off the Mayo. This is going to be a very, very clear trade. I don't like necessarily trading into that London pattern, however. So I'm a little not in. I don't want to trade back up into this, although it can give us a second leg. We can certainly say that. So I'll draw it out here if it plays out. Get the first leg off of the Mayo, and then a very fast move back into the second leg, and then the large move up. Okay, that's the type of thing we'd want to see for a W off the Mayo, not just sitting here at the Mayo, hanging out, and then moving up. We want to see this violent activity both ways. We want to see that action both directions for us to know that the market is being manipulated in euro yen. Okay, so again, I showed you something that was very important. It's the daily liquidity amounts chart. And this is very important. It's hard math here. EJ is 79 billion a day. Euro is 1.17 trillion a day. So if you see a pattern in EJ that looks appealing and you go up to the larger pair that drives it and you see a pattern the other direction, that cancels out the lower volume pair. Defer to the higher volume pair. Why? Because those that run the market are looking for the greatest amount of gain. They're not looking to make a little bit on a cross pair when they can make a lot on a major, right? That's a whole entire series of DMRs to teach that, which was the name we give our evening presentations. All right, so GJ looking pretty similar to our EJ. In fact, you can see that 1, 2, 3 up quite nicely in here. You've got a 1 there and a 2 there and a 3 there, right? See that nice clear coming back into a peak formation high, giving us a level 3 H4 harmonic. Okay, so everything was conspiring to tell you, to scream at you, to plead with you to short the living out of GJ last night. Okay, London pattern. We've seen them before, seen one, you've seen them all. Well, not really. You have to see them all to be able to see the one that you're in. Okay, so there's your London pattern. Obviously a little interpretive at this point, but the lower time frames gave great stuff. I was in them short. That was my trade last night, was GJ short off of this stuff. Really nice amount of breakout traders on this one. All right, nice threes. Absolutely gorgeous. Gorgeous, gorgeous, gorgeous. London pattern is the driver. We're almost to average daily ranges, so we're going to have caution here. 1350 hasn't quite crossed yet. So at this point, we have to defer to our M. Highly unlikely at this point for us to get a move all the way back up here without news. We don't have any red news that'll push that up. But that would be the preferred trade, is some move back up in there. And there's some other possible entries you could take that are more continuation style. I don't have time to go into them, but you want to be short away from this London pattern for the day. All right, ID50 might form later, but we've got this outside structure sitting right at day open price, so I don't want to be too wedded to that. So I'm really, at this point, I'm looking for the day close to happen so we can get an AFP short condition on this one. That would be really nice. So close of the day anywhere below this area, anywhere in that box, will give us AFP short, which will have us looking for these London patterns to the short side. They stack up pretty nicely when that happens. You can see on the H4 chart, it's pretty tasty, big, large M playing out there. And of course, the daily chart looking very, very tasty with a slight move above our previous peak to the left. So that's actually looking pretty swell for a possible away from peak. I know we've got more than one on the board, but usually what I do is identify these. I usually like to identify these. So possible AFP, very keen on GJ. I love this pair. Very keen on this one. So possible AFP in GJ. So that means close of the day. Tomorrow we'd be in a level 1 short or away from peak short, depending on how we close the day. But a close down here is going to be lovely. Nice trading, everybody that got this short. It was really sweet. All right. There's a lot in there. All right. So we're moving on to USD CAD. What is the meaning of AFP? It means away from peak. It means away from peak. It's in our 3-day course that you have access to if you join us. I'm not sure how that's going to work out. I'm not part of the business side of things. I just make trouble in the charts here and teach, but we have entire hour and a half, 2-hour presentation just on away from peaks in the main class. And then of course, massive recordings about it in the DMR forum. So there's a lot of material, obviously, when you join that you have access to if you're so inclined. But AFP essentially means away from peak. It means one of these level ones. It means the ship is pretty much going one direction. How else would you compare it? There's a lot to be explained about what's happening to the mass of participants in the market that the market maker is manipulating at that point. It has to do with emotions, has to do with revenge trading. There's just a lot to it. It's a big concept there. All right, USD CAD sadly giving us a little wedge here. Not the best area to be extremely clear about a bias either direction. We had the nice level 3, as you can see, the nice multi-day rise. And we had the nice shift. We had the away from peak to the short side, the pullback. They ran it in Asia and then took off back up towards the peak, but they didn't get anywhere near the peak. They're sitting right in the range here. So this is a type of market that has lower volume. It shows to me that the market makers really haven't been involved in this area. They were involved in the shift. They were certainly involved in the move to create the false sentiment long. That's what they do. They create the false sentiment and then act against it. They were busy in that part. Once they did the kill shot here, that was it. And at this point, they're just chopping around. I do see a London pattern, obviously. It's a variation. We don't expect you to understand what I mean by variation at this point right away. It's kind of like a music thing. It's like, give me a variation on a Chopin sonata. Someone look back at you with the 1,000-yard stare going, what did you just say? So this is a London pattern. This is a variation of it. There are a lot of them. But as soon as you ingest enough of them, you're able to confidently act on these. I know Steve acted on EU and GU last night, and those were not super clear London patterns. They were variations like this, right? So we'd love them to give us everything exactly like the drawing, but guess what? If they did that, everybody would know how to ride the markets, and that's not the idea. The idea is to get most people on the wrong side of the trades, right? So London pattern to the long side, 1350 cross. We're starting to look. Let's just refer back to the H1. Could go long, could go short. I'm not stuck on a bias at this point. Take it to the daily. Boy, we're really in the midst of two traps at this point. So I'm going to defer to an ID50 long on this one. I know it's a little bit of a stretch, but that 1350 did roll over to the upside. That's one of the rules for the ID50, right? That one did roll up. So I'm a little bit interested in that, but it's got to be super clear according to Carr's rules of the ID50, which there's a little bit more to it, obviously, than what I've got on this cheat sheet here. But you have to have certain dynamics take place that make that trade viable, right? So we're looking for him possibly to give us a pullback, to give the ID50 away from the London pattern. But at the same time, we can easily establish a bias to the short side off of this major peak. Are we just in a big fat level 3 short? That could be the case too. So that's why I have a dual count on USD CAD. I have the sideways chop range mode and as well level 3 to the short side red box. So sometimes I'll look at two possible scenarios for the market maker cycle. That's this section inside here, level 3, 2, and 1. This little section in here, sometimes I'll have a combination. So it could be either, right? We got to close below this area down below. This will be where we'd have an AFP away from peak, meaning we'd be biased short heavily if we got down here. All right, so if we get a close of the day down here, the next day you'd come on and you'd look for one of these short, right? That's a way simplification. Trust me, don't think you really got like the secret at this point with it. There's so much more to it. Again, that's the session tonight. We're going to talk about what else is needed to become a machine, right? To become a bricklayer. What is needed to become a bricklayer? That's what makes more sense. It's how to do this, right? Not hit the home runs. Don't be thinking home runs. All right, so close of the day maybe gives us an AFP short. Let's go ahead and drag on another away from peak under there. Let's take this guy. You can see the little assembly line below. That's why I put that there. Very important to think that way. You have to train yourself to think that way. Most people, gosh, no one thinks that way when it comes to trading. Trust me. And in a sense, I'll say it clearly, you've been, well, shall we say, inclined not to think that way in trading, right? Let the robot do it. All right. So anyway, you have to train to teach yourself to be a robot. You have to train yourself to be mechanical. It's so much easier when you do that. There's not a lot of theme and variation that'll get you mixed up. All right, so let's take it up to EC. You've got USD CAD, possible AFP. You've got an ID50 long. It's very questionable because we have the possible level 3 short in our face up here. All right, so hopefully after a certain amount of time with us, you start to internalize this daily trading organizer, and you can even miss this walkthrough session. You can just grab this in the forum, and it'll give you a nice jump for the day if you're a New York trader. But again, for a New York trader, I really want you at the extremes. So what do I mean? At the top. If you're going to trade New York, I want you at the extremes. Here's a trade from yesterday in EC. This is our T time line. Just at the tip, somewhere in this top edge, if you're a New York trader, that's where I want you in. I don't want you chasing these things in the middle of the range in New York. You really have to be aggressive. And we have something called the high-low drill, which basically will absolutely petrify you at first, and then hopefully you'll get the swing of it. All right, Euro CAD giving us what could be considered probably the cleanest market maker cycle of the night in terms of the look to it. Okay, you can see this is our level 1 area, right? This is our level 1. We moved nicely. Nice shift away from higher level longs that got reinduced back into there. And now we're sitting basically chopping in between level 1 and 2. When that happens, I defer to level 2 as the count. So this one's actually rather clear today as a level 2 to the short side. 5,200 is pointed down. We do have that London pattern. Again, it's really interpretive to some, but if you know what they're doing, all they did was they came back and they worked yesterday's high. So they created the M on the higher time frame. All right, now obviously for some people is a trade, right? Let's bring our little friend over here. For some people, that's a trade, right? And we've got TDI confirmation for that one. For those interested in the H1 trades, that was nice. I'm sure some of you took it. Nice trade. Very nice trade. Okay, M15 chart, you've got the variation of the London pattern. It's not obviously the spitting image of the drawing, but you can see basically what they did was they broke the Asia range and then whipped it back down. But they came back into yesterday's trap volume that got sucked in high, and they hit them again, and then they ran the stops for those people that were long. This is a stop run right here. Okay, this isn't supply and demand fading. That's a stop run, right? So we have the 1350 cross that gives us the window into the possible AFP short. EC, nice, 5200 is pointed down. We've also got the London pattern to the downside. That gives us the ID 50 short, right? We've also got, if you wanted to follow through and punch some of this in, the ID 50, 1350 cross that's happening there. All right, so might have an ID 50 short. I think the M is probably not in balance at this point. We're 50 pips to the high a day. I'm going to keep it on the cheat sheet as it is, but maybe we get the second leg up for the day. That would be 3 hits to the high. If we did get that, that's a nice trade short if they give it to us. I'm not sure if they're going to do it. They've already come back a couple times to that area, so they might be on their way down into level 3. So typically what I like to do is measure out 3 times ADR and then put a little blue box down there. Let's do that together. So 258, we'll measure it down right in about this area. So we're right between the 00 and the 25 line down there. So we'll put our blue box down there. That signifies 3 times ADR. That'll be an extremely blown out area. And then I'll do my count thusly. All right, very simple. Not a lot of rocket science to it. But if you are inclined, if you're of the mind to study, well, you can take any of these templates and go back way back. These are all done with these sessions in mind, meaning that they were done live, and in a lot of cases way in front of this stuff. So you can go back on any of these pairs. I provide these templates at the end of every session for our members, and you can load these templates on your own MT4 and dig in and do some serious hardcore study of this market maker cycle thing, right? It's not extremely complicated, but it's elusive because it's simple. Okay, very important that you understand this, what things are simple and what things should be left complicated. It's usually backwards. Usually everybody complicates things that should be simple and makes simple that which is complicated. So I implore you to really think before you put live money into these markets. Okay, so ID 50 short in EC is a possible trade today, as well as another move up into the top edge to give us an M. I'm not sure if that's going to happen. I see it mostly as an ID 50 opportunity short in EC for the New York session. All right, let's move it on to EC. Okay, someone saying no audio. Pretty sure we've got audio. I only see one person saying no audio. Generally, as a rule with GoToMeetings, you want to close as many other applications that are open on your computer. And if possible, get to an actual hardwire. Wi-Fi sometimes drops out because you have internet packets. The internet is not a single stream like your telephone lines. It's basically throwing chunks of data at any given time, and your computer puts it all into RAM, and then it puts it together into a cohesive line. So sometimes you'll get dropouts if you have other programs on running in your computer because it'll eat up RAM. Okay, thank you guys for telling me you have audio. All right, this is the last pair that we look at in our list of these pairs. And again, I want to just stress what Steve mentioned last night. I hope most of you were around for it. And Steve went with 7 p.m. You can really take just 4 of these and nail them. Okay, so we're, in a sense, these pre-markets are a little bit overkill in terms of the amount of pairs we watch, but I do like to find the pairs that seem to have the most going for them and then whittle that down and focus on maybe 2 or 3 pairs during the New York session. But that's, again, big concept for us to try to elucidate in a couple minutes here. Not going to happen. All right, so what we do have, however, with the GC is we have some nice activity illustrating the personality of GC. It really does these big, long moves and reverses, big, long moves. Sometimes it'll hang there, eventually reverse. It's a wild pony. That's what GC is. GC is an interesting pair. It was my favorite pair when I traded New York session exclusively. When I first started with Steve, that's all I did was trade New York session. And I was able to do well by basically sticking with GU, UC, and GC. So those were the New York pairs that I made my bones with, if you want to use those terms, right? So it was GU, UC, and GC to me were the most dynamic pairs for New York session. Personally, that's what I experienced. Sometimes you'd get something in EG, EJ, and GJ. So maybe a couple of these is backup, right? But not so much. It was mostly those first 3 pairs that were very, very productive. Now, again, it's going to take some time for you to have the patience to look at only 3 pairs during New York session. But usually once you have conditions that are appropriate, it actually helps a lot because you're able to really wait for the clear patterns. Okay, so from a market maker cycle perspective, we can see that this is a case where I got the level 3 completely wrong, and it flipped right back up and went and did its thing. But it gave a London pattern inside there before it did that. Okay, so we're not having to be right all the time with these H1 charts. In fact, we know we're not going to be right all the time with the H1 charts. But you can see right in here, this is the gray box is the Asia range. It went just a little bit higher, and it gave a London pattern short right here. Okay, that's one of our variations, but it was pretty nice. And then it just whipped off out of there and gave us a move up in a 3 times ADR condition from this peak reset down here. Okay, so we're looking at a market that's already achieved 3 times ADR condition. When it achieves 3 times ADR condition, it typically wants to pull back. It wants to start to cycle the other direction. So for GC, what I see now, OG, is a cycle trying to start the other direction. Okay, so I see a clear cycle up the first time, pull back, reset, another cycle up the second time, with in fact a 4th move up. Sometimes you get 4. So this is 1, this is 2, this is 3. Nice trade, nice trade. And then 4. So you have sometimes these larger moves up. Now, when I see this, sometimes I'll run an alternate count. I'll run an alternate count to try to get my head around what it looks like if it does take off to the long side. But really, my strongest feeling at this point is that we've exceeded 3 times ADR condition, or bias is short at level 3. Okay, so when I use the black numbers, those are alternate counts. That's the backup count. So I'm not favoring that. I'm favoring the short in GC. Okay, so level 3 short, right? Possible L2 long if I'm looking at this alternate count, but I don't love that alternate count at this point. Again, another one. I mean, it just, you'll see at some point in time, once you get this basic grid in mind and you work in what we're going to talk about tonight at 7 p.m. Eastern, and then you do a lot of work, you'll get to the point where you can pretty much effortlessly become involved in a couple pairs and get your hit rate up to 70, 80%. Maybe 88% like Car Chen, if you really, really want it. All right. So again, London pattern, this was news. That was your red news. So it's not exactly the most exciting thing to trade until you really, really have your risk management super tight. And even then, the red news, they can slip you. They can move. They don't have to honor your stops. They can do a lot. The dealers can do a lot of games during red news. So we try to get people to not trade red news. That's what this move was. But in similar fashion, this pair, if we do get a close of the day anywhere near average daily range, we're going to see an away from peak short condition, which is basically, if I wanted to make it really simple for you, it's this moment right here, right, where our bias is short. Now we're looking for the cycle to head the other direction. Okay, so GC would be a short bias today. Let's see what we have in terms of our 15-minute for opportunities. 1350 cross is nice. W off the Mayo is possible. I really don't want you trading into a pair long at 3 times ADR conditions, so I'm really biased short. So ID50 would be my one and only suggestion. I was looking at a possible M here. If there's some type of explosive event, we never know. Maybe in the oil market. Oil is a big part of the CAD. So if we get some crazy news out of the Middle East, sometimes a big move in oil might tend to create this large second leg. But at this point, I don't think it's going to give us this. But that's in the cheat sheet there. An M, the ID50 at this point, I think is what you're looking for short in GC for now. Okay, so again, I say you're looking for an ID50. That means Chinese to most of you who don't know what that is. And if you are trading ID50s, I really want you to have absorbed cars material on the ID50, so you absolutely know the trade cold, and you're not just winging it. Okay, just because Jim puts a bunch of ID50s down here doesn't mean they're all created equal, right? We really want to see how they play out. We want to see the details of how they play out. Right. And then, of course, if you want to fill in the checklist as it goes, then you have a good idea of where it's headed. All right. So that will be our session for this morning. And what's a zone flip? These are all great questions. We explain them all. Join our group, man. That's a big part of our strategy. It's definitely something that you'll use for the rest of your trading career if you do choose to dig deeper. All right. So we'll see you guys tonight, 7 p.m. Eastern Standard Time. We're going to get more into the theory of the market making. We're going to get past this idea of if the market is rigged. We're going to basically give you conclusive proof that it is, as best as possible, obviously, unless we were walking into a trading desk with a cell phone camera showing all these orders popping off. You don't absolutely know, but we're pretty close to getting the best possible evidence. And that's basically what all of us have to go on it where we are. None of us are in the banking world. So again, we're grateful that Steve decided to share this information with us. And we're hopeful that you can grab a piece of it and make a living doing it. All right. So we'll see you tonight, 7 p.m. Eastern Standard Time. It's a pleasure working with you all. Thanks again for joining. We'll see you tonight. Have a great trading day if you are taking trades. Be safe with the risk. Bye now.